Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. I am certainly glad that you found yourself here. So today, my good folks, I am going to be talking to you about how to make trading easy, right? That's my whole objective. Anytime that you see me online, I am showing how we can make trading easy. One of the things that we must get under our belt is understanding price action, understanding market structure. When we get a good grasp of understanding that, we can then begin to make trading easy. And I'm going to show you just how to do that. So if you find yourself here on this channel, you're someone who has not been profiting consistently in the market. You've been up and down like a seesaw yo-yo. You in today, out tomorrow. You're frustrated, and you're certainly just losing more than what you're actually gaining. You definitely came to the right video. What I'm going to ask you to do is support this video so that I can help more people. Support it by subscribing to the video. And if you have a comment, certainly you're more than welcome. I do respond to my comments as well. But subscribe to the channel so not only you can get this information, but others can as well. So with that being said, let's jump over to the chart, and I'm going to share with you one of the easy ways that you can simply trade in the market. And I will have three in particular that I'll be sharing with you. But today we're going to be talking about one, and that's trend trading. So come on over. Let's go to the charts. Let's go to the charts. All righty, all righty. Okay, so we are on the chart. So a little bit about trend trading. Trend trading is a phenomenal way to trade because one, it puts you on the right side of price. In other words, the direction price is going in, the overall direction price is going in. It puts you in alignment with that. You're not trading against the tide, so to speak, right? And you have a much greater probability of profiting when you are trend trading, because why? That's where price wants to go. So in order to be good at trend trading, you have to know when price is in what we call a continuation. A continuation is always in the direction of the trend. So the first thing that you want to identify if you're going to be a trend trader is what's the trend. Now, keep in mind, every time frame has its own trend, but it's a micro trend in relation to the overall trend. So keep that in mind. So with that being said, you want to identify your trend on the higher time frame, right? You want to identify it on the higher time frame, because the higher that time frame, the stronger that trend is. And what it says is this is overall where I want to go. So if you're looking at the trend, say on the 30-minute, and it's bullish, and you go to the trend on the daily and it's bearish, then the overall movement that price is going in is bearish. So that small bullish trend on the 30 is a short-lived move. And a lot of people get that so messed up, and it begins to derail your position because really you're not trading with the trend. So hopefully that makes sense. I do a lot of this in my trainings, and access the descriptions inside of the links inside of the description so that you can get connected with the 20 pip trading community, where we go over those kinds of things. And I also have some other training programs and information that breaks all of this down as well. So just access the links down in there. You'll get what you need, right? You'll get what you need. Okay, so with that being said, we want to go to the daily, right? We want to go to the daily. Now, also, let me let you know that based on the type of trader you are, that will also give you an idea of which time frame that you'll be ultimately working with. So if you are a scalper, for instance, and you're scalping on the lower time frame, then the 1 hour, if you're scalping off of, say, the 15-minute or the 5-minute, then the 1 hour would be your higher time frame. Now, that doesn't mean that you can't look at the 4 hour or the daily. I personally recommend doing that anyway, no matter what type of trader you are, and then drill down. So that's another thing. We'll get into that on other videos, right? And so ultimately for trend trading, go to your daily and you want to see what is the trend, right? What is the trend? Where is it going overall? A lot of people feel like if it's a bullish trend, we should see a whole lot of bullish movement. That's not necessarily the case. You're always going to see the opposite movement. But what you're looking for is the overall movement. Is price making higher highs and higher lows? Is price making lower lows and lower highs? Did price break a key level of structure? All of these things put together gives you the overall viewpoint of what the trend is. So with that being said, we clearly bullish. Why? I'm going to share with you why. The first thing you want to do is, use your tools, right? Let's go ahead and drop a trend line here. So we got our trend line and we have our wicks, at least 2 to 3 touches on the wick. So we have our trend line. The first thing off the bat, the trend line is going up. The trend line is going up, right? So that's a bullish move, right? And then what you want to do is you always want to look left to see what levels of structure did price break. Because when price starts breaking levels, then we're going in a different direction. And if it's bullish, for instance, and price breaks previous lows, if it breaks previous lows in a bullish direction and it breaks 2 key levels of a previous low, then we are trending bullish. Okay, so with that being said, we can look left here. Now, this area right in here, we had a lot of rejection in this area, a lot of rejection in this area here. And so I will be looking for price to break this area right here, right? To break this area. And once price breaks that area and retests the high of that area, then I'm looking at a overall bullish move. Now, because this is the daily, what's going on the daily is going to give you a lot of data on the lower time frame. So if you are an intraday trader, for instance, and you're looking to get into a position and hopefully be out of that position within 24 hours, maybe 48, then the daily, I think, is really, really good because it's going to give you enough data that you'll be able to identify pivotal optimum entry points, right, for your move. So with that being said, we are bullish, right? We're bullish. So now that we've identified the overall direction price is going in, let's drop down to the lower time frame. As a trend trader, so the other key area for a trend trader, when you drop down to the lower time frame, the other thing that you want to be looking for is, well, where is price, right? If I'm a trend trader, I'm trading with the trend. So if I just identified that the trend is bullish, then I'm only looking to buy. Make sense? I'm only looking to buy. So now the next question is, where do I buy? Right? So this is where you identify key areas, what? Of support. Key areas of support. So you want to be asking yourself, well, where's price now? What is price doing now? Because if I'm looking to buy, I need to, one, know what price is currently doing. Where is it, right? And then I need to be able to identify key areas of support. Key areas of support or a demand zone, right? A demand zone. And so on the 4-hour, what we want to do is look for those areas. We want to look for those areas. It's not enough to say I'm going to trade with the trend and you don't know where price is currently and you don't identify those key areas of demand or those key areas of support. So it's very, very important. So obviously at the trend line here, which is our daily trend, this is a potential area as well. Let me give you another great trading tip, right? So this is obviously this is a support area, right? Because what happened every time price came near it or at it, it pushed up. So now this area here becomes that potential area. So how do you drill down, right? How do you drill down? Because price may not come straight to the trend line. When you see a bullish, in this case, engulfing candle, voila, voila, voila. That's a hint, hint, clue, clue that there's volume there, there's buyers there, there's bullish pressure there, right? And price will come back down to capitalize off of that. So we want to identify that, right? And what I like to do is take my bullish engulfing and I'll just create a zone from the smaller candle wick to wick. And then giving you my VIP tips and tricks, right? And then once you do that, I like to go 50% of the zone. So I'll measure the zone, right? In pips, how many pips from high to low? We got about 110. So that's about 55 would be at the mid area, right? 55 is the mid area. And then I just kind of look for where price is in relation to that. So it looks like we're right on the wick of that bullish candle. And then what I simply do is drop a line there. I'm giving y'all the tips and tricks from my VIP, but I want you all to know trading can absolutely be easy. Easy doesn't mean that you're going to win every single trade. Easy doesn't mean that you're not going to have challenges. You will. But what easy means is that you have grasped a clear understanding of market structure, right? Of market structure, price action, and now the charts is not a boogeyman. The charts is not threatening. The charts is not causing you anxiety. You have developed a level of discipline. You've developed a level of patience, right? You develop yourself psychologically, right? Personal development, all of that has a big bearing on your ability to be consistent in the market. And that's, my friend, when trading becomes easy. So now we have our 50% area. So in this area here are your potential entry points. They're your potential entry points. The high here, the mid, and the low. And the 50% area, the whole reason I do that is to help mitigate some of the potential drawdown, right? So if price comes in, if you put your position at this area and price continues to rally down, then you're looking at that drawdown. If you go 50% of that, then you just mitigate it. You just cut it in half, right? So that's the method to the madness for me. And that's been working very, very well. So again, on the 4 hour, you are identifying those potential areas, right, of rejection. And you just put a zone around it, right? You put a zone around it. So we have this area right here. You know, where did price stop and turn around? Right in this area here. You've identified those areas as well. The key is, if you are trend trading, identify the trend and identify the area in which you want to be potentially entering into the trade. Now, everything that I've done thus far is based on price, as you can see. We have not incorporated other confirmations, which I think is very, very smart to do, but you don't want to ever lead with those indicators. You always want to identify and analyze price first, and then add the indicators that you're using, and those indicators should confirm what you've already identified. That, my friend, is the proper way of using an indicator. And I'm going to do another training on indicators, because all indicators working together is not always a good thing. You want, if you're going to pair indicators together, they need to complement one another as it relates to movement, volume, and what it picks up and reads. So that's another training that's going to be coming. So again, subscribe to the channel so that you can stay in the loop. So that's what we're going to be doing on the 4 hour. So let me go ahead on and just identify this area. And then on the hour, we're going to drop down from this point. So on the hour, we pretty much getting closer, right? We're getting closer and to our potential area for entry, because you don't necessarily want to wait for price to come down to the daily zone, right? You got it identified, so you keep an eye on it, but there's pip potential prior to that, right? It's pip potential prior to that. And so this is the 4 hour support that we just dropped on the 4 hour. Why is this strong? Well, look left. What did it do? What did price do when it came here? Came down, it stopped, it turned around. Came down, wicked below, but didn't close, and did what? Turned around. So this area right here is an area where rejection was. So we're looking for price to come into this area. Now, once price comes into the area, Once price comes into the area, this is when you want to incorporate your entry criteria, because you don't just jump in because it did that, right? You don't do that. So I have the 62 on my chart. I have the simple 62 moving average, which I really love, right? And so when price comes there, you can either wait for price to break above and retest the high of the 62. You can certainly do that. If your potential entry area is in and or around an engulfing candle, a bullish engulfing candle, you want to zone that out as well, right? And I think we do have one. We have one here where we got a nice bullish move right there and our bearish wick. So again, I'm going to zone this out, right? And this may be our new potential area, right? Yes, we'll use this area, right? Well, we got wick action in this area. We have a bullish engulfing candle in this area. We have resistance where price came up, hit the high and dropped in this area. So it's pretty strong. And if we move our chart further back, you'll see that price reacted to that area in the past. So you see how the reaction in here, we definitely played around in here big time, right? So really, really solid, really solid. Nothing's a guarantee. And let me just also say, I have to get better at this. I am not a financial advisor. I am not qualified to give you financial advice. I am a fellow trader just like you. I've just spent some significant hours on the chart, and I'm just sharing what has been working for me. So remember, trade at your own risk, and certainly use proper risk management if you decide that you want to enter into the market. So with that being said, we have our zones identified in here, so you can wait for price to come on into this area here before you consider your buy. And I also have the MACD. So for my MACD, you can use this MACD in various ways. What I'm going to show you for this training is with the MACD, I'll be looking at that signal line. I'll be looking to see what direction is the signal line going in. If I'm buying, is the signal line curving up? Did the signal line curve up and break away from the histogram? That's what I'll be looking for. And then you can enter right now. For me and my group is the 20 pip trading community, and we focus and we are perfecting 20 to 25 pips. This is the reason why our profit potential is pretty high, is pretty decent, right? Now, of course, there's no guarantees. One person's results don't guarantee another's, but overall and collectively, we profit pretty consistent because we have very, very specific and strict rules under which we trade. And that is why we do that, right? So we have a trading plan that I have created and tested and now has been implemented, and results are being made. So I say all of that to say this training is just designed to give you an overall, just to give you an idea of what you can do as a trend trader. And hopefully I was able to point out some key factors that you need to consider when you are trend trading to help your probability of profiting inside of the market. Now, full training and ongoing training, obviously, that is for those that decide to be VIPs inside of the 20 pip trading community. I invite you to be a part of that. Again, access the link inside of the description of this video, and with that you can be on our weekly trainings and our 3-day live trading inside of the market, along with some other things that goes along with that. So if that's something that you're interested in and you're ready to really get a solid plan and get on the track of consistency, then certainly subscribe to the channel, access the link, all that good stuff. Hopefully this has been a help. If so, give me a thumbs up. I appreciate it. And I'll see you guys on the next video. Bye-bye.